All right, guys, welcome back to another episode of Market Mastery. I'm here with Trader Troy. We've just had a monthly close and a weekly close. So we're going to give you guys all the updates and the key trade setups that we're looking for over the next week or so. So I'll handball across to you, Troy.
Sweet, we'll get into it, guys. We'll start on the monthly and move in. So let's go back to the monthly chart. Something to just take note of at the moment, I think it's very important, is just the high that we had in 2019 and this particular consolidation period we had here in 2018 on the way down. It creates these two lines, two levels. And if we go zoom in those two levels now on, say, the 4 hour, we can see price has just been dancing in and out of it for the last month and a bit now, right? And then we just set up here sideways as well. So we're at monthly levels and we're spending months at those levels. Good thing in the long run, what I mean by that is if we do ever end up above this particular period, right, it's going to become mega support. It'll become a high demand zone. Everyone will understand that this will be major support if we do rally off that. So the next time, if we break above it and we actually close above it on, say, a weekly time frame, we'll start to turn very bullish very quickly. So just pay attention to those two particular levels there. And then the same thing applies if we come underneath it again. It'll be quite bearish because we do have a bearish divergence here on the RSI on the monthly, but it is quite weak. So nothing too concerning, but we really don't want to lose this cluster with high time frame closes like the monthly and the weekly, in my opinion. The weekly, we're just dancing in between it still. A bit of a symmetrical building you can see through here, even on the weekly, right? And then we can just zoom in on, say, the 4 hour and see that playing out at the moment. So it's getting quite tight. I expect some kind of resolution within the next probably 48 hours. Usually it's Monday, Tuesday that we see the volatility, or we're going to have another week of just boring sideways, and then next week, Monday, Tuesday, we'll probably break out. It's usually how these play. Pretty clean, symmetrical. I think just play the side that breaks. If we come up and test, we're looking for continuation. Right? If we come up, then lose it again, then we're looking for a downside and very aggressive downside. And if we just lose it here and then retest, that'll be like a nice continuation to the downside, which is what I'll cover on these charts here. So this is the total market cap. Total market cap is all of the money within the cryptocurrency space. At the moment, it's rejecting at a bit of a retest here, a potential bear flag, as well as the 382 from this move here, right? So the first bear flag here, this period of consolidation after this impulse down, has a target of this 618. So I think we'll come down here. I think we're going to break downwards. And then we've also got a macro bear flag, which is this entire month of consolidation with a target lower than it as well if we do get pretty bearish. So I'm just watching both of those play out. Play out level by level though. Not going to go and assume we're going to hit this 100%. We'll wait till we lose this level, then wait till we lose that level, and just play it on the way down. But total market cap looking pretty bearish here in the sense of rolling over. This to me isn't bullish. We should be seeing continuation after we made a high past this high. Because we've fallen back under it, I'm going to assume that we're going to come down from here. But play it level by level, right? If we reclaim that 382 again, then I'll be looking to get into multiple positions across multiple currencies because this is total market cap. Just looking at Bitcoin on the current 4 hour, I've got it in a bit of a downward channel here, right? There's a daily order block through here you can find, and we just keep rejecting that. We can't get back above it. Moving in, zooming in, we just got a TD9 printed here. So if we can start closing above this doji here, this gravestone doji, is it the gravestone? I'm not sure. I know it's a doji, but if we keep if we start closing below the 9, that's not good. I'm looking for further downside. If we can keep closing above that 9, I'm looking for upside. Ichimoku is saying to stay out, and then we've got the monthly open up here as well. I think we're gonna come up if we are going to go higher and then reject and come back down. So far, if you zoom right in here, we can see the P here. This is the pivot that started for the week, the weekly pivot. Well, it's a 4 hour pivot that lasts a week. We're just playing in that at the moment. So we should see resolution, I think, within 48 hours with Bitcoin. I'm thinking further downside, but just play that symmetrical, right? Which is through here, easy to identify, whatever plays out. Next up is just Bitcoin dominance. We're seeing here that we got a monthly close above the 382 of the low to the high that we've had, right? So I'm assuming we're going to end up doing something similar to over here, where we get a down, right? We get a nice little candle, and then some form of reversal. So I think October is not the month to be long in alts. I'll be looking for shorts over longs. I think something similar to this is going to play out over the next quarter, right? So just keep an eye on Bitcoin dominance. You can zoom in on the daily and you can see that we just respected this level for a while now, right? And it looks much like the DXY and in this reversal, where it's just in a range. Once it reclaims the top of this range, I'll be looking for upside here. When we reach up here, if that does happen, if this does play out, that's when I'll be looking to bag up alts. So this going bullish and playing bullish like the DXY has recently, which I can show you here. So similar structure, but we over here at the moment on Bitcoin dominance. When it comes up here, that's when I'll be looking to buy alt. So just pay attention to the Bitcoin dominance chart if we do start heading up, because that'll be probably the lows of the market, right? Which is what we saw back here in March when everyone was dumping because of the COVID. It was the best time to be buying alts. So looking for something like that again, just to play the same trick twice. Moving forward, DXY. DXY's got a daily order block through here. It's been respected so far. We can see that the close was just above it here as well. And I've also got the 20 MA and EMA coming through here at the moment as support. So we'll just see how that plays, see if it holds it. So far, and to me, it's looking like there's a more likely upside move from here. But we are in just between this daily order block here and the 4-hour one, which I can just zoom in and show you here. So it's pretty much just a bit of a shit fight for the daily and the 4-hour. Whatever side ends up winning, I think we'll just hit to these particular levels, right? So if this does fall down, that's going to be great for markets. I just don't see that happening in October. October, based on data, shows that October always is bullish on the DXY and bearish usually on the SPX. And as we know, most things have just been following the SPX as of late. So just play it level by level. Don't front run. Always cover Iota. So Iota's had a nice recovery from its lows after the dump off from the 21st of September that Bitcoin had. And a nice daily bullish candle over the weekend here as well, back above all the levels that I worry about. So it looks like it may have continuation to the upside here, but ultimately it's going to follow Bitcoin. So if Bitcoin gets a bit bipolar, so will the rest of the market. Just looking at gold, we can see we've flagged. Could be a descending or it could be a symmetrical if you draw it this way. I'm looking for downside. There's a demand zone here, right, and we've also got a fib extension here where the 200 daily moving averages as well. So I'm going to be looking for somewhere down here for hopefully some continuation to the upside of this. When we zoom out on this on the daily or the weekly, it got a bit parabolic, so I think a bit more time is needed, and October, November will be great for that with the election. And then they can carry on its bullish trend, hopefully, coming out of that. And validation level for me for this setup is if we start trading back above the 382, right, which is the swing low here and the swing high here. So if we can come down to this, I'll be looking for longs in this range, ideally off the 200 daily moving average, but we also need to take into account this level. Alright, so that's my gold setup. It's going to take patience. This is a good couple of weeks off at this rate, and I think it's too late to short here because it may not be, this may just carry on, right? So it's more of a patience game. It's too late to long. Sorry, it's too early to long and too late to short on gold unless you're scalping. And then silver is very similar. Silver, we're having a really hard time here at the moment. It's in somewhat of the same downtrend as, say, gold as well as Bitcoin. They're all in these downward channels at the moment. And I'm not going to get too bullish on them until they actually breach the channel. So once they're trading above the dotted line on all of them, that's when I'll start to get bullish. But until then, they're just in a downward channel. Playing the channels over the years has always kept me usually profitable. So just waiting for some kind of rejection here. Hopefully, we'll get some more sideways before we fall, if that's the case. And then we've just got CME. There's only two gaps at the moment on CME here. We've got the one that we left over this weekend, and we've still got the one that's been here for the last 2 months. Right. I do think we'll see this close before we see to the upside. There's two different kinds of gaps. I'll just quickly cover them really quickly. This particular gap here is when there's a clear gap. You can see there's nothing in between those two candles, right? So it leaves an area here that's blank. A good example of that is this one that we're looking at right here. But there are other gaps as well. When the candle itself closes, if I can find one really quickly, or on the daily. One second. So something like this one here, right? The candle's here. Sorry, opened here, then closed up here. Wait, that's not one. Jesus. Opens up. This one here's a good example. Okay. So this is technically a gap here as well. Okay. So the candle closed down here, but the next day opened up here. Okay, so there's a whole period of price with no volume in between that, right? So there's a gap in the market here. There's a higher percentages of these being not closed and just ignored, and the market carries on without them. However, there are gaps like this where there's a complete gap in the market, as you can see here. They have a 100% strike rate of getting closed, except for the current two that are open, right? But for the last 3 years, every single gap like this one has been closed. Um, so just statistics and data say sooner or later this could be closed, but as we have seen, that these gaps can stay open for quite a while, right? So let's say we get bullish and we don't close that gap and we start heating up, it can still come back and close and be somewhat similar to this, right? But sooner or later, those gaps get closed based on data. So just keeping that in the back of my mind as well. I'm favoring downside still. This is a bearish pattern that played out bearish, right? The head and shoulder top. And all we're doing is consolidating sideways. We are doing pretty aggressive bounce here, decisive bounce off support, right? But now we're just dragging through it like this. This is not what I want to see. This is usually when symmetrical triangles or ascending triangles fail. Is when they come for their third test and it just drags up like this. Sometimes they'll come out fake and then fall down anyway. So just keep an eye on that, how this plays out when it drags up. When we go in the 4 hour and zoom in, we're seeing that similar behavior at the moment. It's just a perfect grind up like this channel that it's currently in, right? When it grinds like this, it's not bullish behavior. Usually you get some kind of top before it completely dumps. So it'll come out and then completely dump. A good example of that was actually before we fell back here. We just grinded up for a while. It was dirty price action, right? Short squeeze, and then we nuked anyway, right? So I think something similar to that may play out, which is how this price action here is playing out, right, into some major resistances right here. So just keep that in the back of your mind. And then you've also just got Back's chart. There's two gaps down here. They've got a second one, right? And they've also got the gap that CME's currently got as well. So there's vested interest to bring it down further. And October being a bit of a blood month for the SPX and the crypto market being pretty much pegged against that this year. I think there's a good argument we'll see lower yet. That's pretty much all I got, Kyle. I'll wrap it up.
Sweet.
Share your screen when you're ready.
All right.
Cool.
So Troy covered off most of the things that we know we're both sort of watching, and I agree with pretty much everything he said. The major thing, though, that we have to watch and be aware of is that I've got this symmetrical triangle here, and there's a chance still that this ends up just grinding up and then breaking the upside and pushing up, which I think would then probably take us to test at least the bottom of this weekly order block here at 11,500 to 11,600 and possibly even up to 12K. Though this is a bearish setup, so it's most likely to break to the downside. I've been looking at this 9,600 level for that CME gap to get closed for a while, plus it's a really key order block on the chart as well. And what I'm seeing is that there's probably a decent chance that we end up putting in a really big daily bullish divergence, which ends up being the bottom for a major reversal move, which would also be the resolution of a really big Elliott wave pattern as well, which Bitcoin does like to actually play out when it's quite bullish, right? So you got this 1, 2, 3, 4, 5, which is super obvious, right? Then we have our correction wave, which would be this A, B, C, right? And then it's just picking how deep does the C go. Does the C wave come down all the way to 8,200, which would make Troy really happy? Or does it come down only to about this 9,600, 500 level? We put in a really big swing failure pattern there on the daily, which would look something like this, right? So this is the setup that I would really love to get, right? So we would roll over sometime in this symmetrical triangle here, break to the downside. We're not going to make it all the way to the measured move, right? Which will trap a lot of people underneath the new lows here. So one thing that we need to remember, right, This is obviously the last high, right? Then we make a lower high. This is the first low, right? So if we break that low there, that means we've got a really serious change of market structure. So I think that level should be defended quite aggressively by bulls. So it's, who wins that battle there? The bulls win or the bears win? Do we actually start closing and trading below this low here? Or do we just put in a low and then end up, swing failure patterning that level and then we take off, and then that's sort of the end of the final dip before we have this huge macro play that finally plays out. Been looking a bit of macro analysis over the last couple of weeks in our Discord channel. So I'll just quickly give you a quick look at that. So we had the current time frame setup. So this was the setup back from the last full market cycle we had from 2014 to 2016, right? And we sort of, it just looks very similar to the current price action happening right now. So we had 1,078 days between the top and the 2016 election, right? And then you can see straight after the election, we broke out of a really big trend line. We support resistance flipped that trend line, and the market got extremely bullish. And you know the rest of the story. Went from $700 to $2,000 in about a year. $20,000 in about a year, right? So let's go and have a look at the current setup right now, which is this chart here, which is looking very similar, right? So 1,058 days until from the top till the current US election, right, which is going to happen in about 1 month, about 30 days or so, right? So we're having a really key support and resistance flip, right, of a key trend line, right? So we're flipping that level right now. So what I'm thinking is we might come down one more time to test that. We have the election, and then probably the entire market just explodes after that, especially I think if we get a Donald Trump win, right? I think it'll be much more bullish than if Biden wins, and the market will react very strongly to that. So that could be the last dip that we get. It could be literally the prime entry that we get for the next year and a half. So this is really the key entry that I'm watching for: daily bullish divergence and SFP. So I'm looking for a candle it's going to be about here, right? It's going to look something like this. Right? And it'll have a nice long wick, and it will come down, tag this order block here. There'll be a lot of buying. We get a nice bullish hammer here, which closes above these wicks here at about 9,800, right? So looking for wicking below 9,800, and that would be the entry candle for this next move up. So that's what I want to be getting long and strong. If we do get that set up, though, it might not come. And we'll have to wait and see what happens after that. If that doesn't come, I think there's probably a higher chance that we come back down for a deeper reversal through the rest of November, possibly down to this 8,500 level. And that would look something a little bit more like this, right? And we get rejected and we might come down, put in more of a bottom pattern. The other thing as well to remember is this could actually play out as a reversal triangle. Reversal symmetrical, because usually these are continuation patterns, but it could end up breaking out the top here, flip this key monthly level, and then that would turn into an ascending triangle, right? And then we break out the top of that, and it'll end up being very similar to the bottom pattern that we put in down here, right? Be very similar to the way that this ended up playing out, right? So be watching for something like that, possibly in the next couple of days. I think that's probably one of the best setups that we're probably going to have, right? So the other thing as well is if this does end up breaking to the upside and then gets rejected, that's going to be a really nice short entry here as well. So there's a whole heap of really good trades that we can take off the current setups that we have at the moment. So lots to look for. I think lots of really good trades to play out. I'm just going to quickly cover off gold and silver, what I'm seeing at the moment. I think silver is probably going to have a dip down to test this key level at 1968. If not, at least come back to test 21. I do think we're probably going to see another dip on precious metals, right? So the 1961 is just the previous high here. And then we've got previous support and resistance from a long time ago back here, right? So it's a pretty key level as well. 21.20 might be the low for silver, but I do think we're probably going to get one more rollover and then go. Gold actually looking fairly similar, to be honest. The daily, this possibly could be topping already here. So you're going to be looking for similar sort of setups, daily bullish divergences, right, off here, right? Those sort of things. Generally what we see in really strong uptrends, you come back, you have that daily sort of bullish divergence. Obviously the symmetrical triangle got rejected, right? So it's a bullish setup that failed. And then probably looking for, some sort of falling wedge now to play out. So this might end up playing out like that. We get the daily bullish divergence in there, at the bottom of the falling wedge. And then, we're probably going to, if this does play out, it's probably going to mega moon from there and break, new highs and all that sort of stuff. And we'll be looking for Fibonacci targets, but, we can have a look at that a little bit later. But I think one of the targets that I was pulling out was 2,200 and then possibly like a 2,400 from there. But we'll have to wait and see if the setups do come or gold completely rolls over, which I don't think is going to happen. I think gold will just continuously get stronger as the US dollar starts to get weaker. What I'm watching at the moment on the US dollar, right, we've got this key level that's coming through price at the moment, which is taken from back here, right? Now, price is obviously reacting to this level at the moment. We just had a support resistance flip on the key level. And it looks like we're probably going to be stuck inside. This could be a little bit of a trading range for a little bit. So might go sideways for a few more days, but then if we do break for the downside, then expect all other markets to take off from there. If we do flip this back into support and then get out, I would expect all markets to dump and the DXY to finish making its run, possibly up to around this 95 up to 96 level, and having a much stronger rally, which would mean Bitcoin will come down a lot deeper and gold, etc., will come down a lot deeper as well. The other thing to watch out for also is the stock market is looking really strong, and especially with Donald Trump getting COVID, and it looks like he's going to recover from that in a couple of days. With these new therapeutics that they're going to start pushing, and they're going to use that as leverage, I think, to pressure lawmakers to reopen the economy and governors and everything like that. Because you got to remember, in America, the federal government doesn't have control over the states. But so it's up to the individual governors. Florida just opened up completely. I think, now they're going to push, we've got these therapeutics. The population's going to, sort of rally behind that narrative that they're creating now, that COVID isn't really that deadly. Just look, the highest profile person probably on the entire planet right now. Got it, recovered it after a couple of days. It's just, less dangerous than the flu. We have to get on with our lives. We have to reopen the economy. All that sort of, rhetoric's going to start coming out. I think there's going to be very bullish for the economy. I think it's going to be very bullish for spending. It's going to push all numbers up. It's going to be bullish for jobs numbers. And, the economy is reopening properly again. I think we're going to see the stock market confidence really start to take off again. And I think everybody's expecting a really huge dump coming into the election. And we just might not get it, especially now we know that we have the Federal Reserve and BlackRock in the market trying to do their very best work to eliminate short sellers from the face of this earth, right? So we could see something like a head and shoulders. We've got a little bit of a head and shoulders playing out here. So this might just continue to the upside, right? Or we might have one more swing low. We might get like a head and shoulders failure pattern, right? So just in case that does happen, I'll explain how to trade those. All right, so you want to watch the neckline and see how that plays out. If you do think the market's going to break down, you want to be getting into a short entry here at the moment, right? So your trade would look like this. You'd be getting into a short right now. Your stop loss would be above the previous all-time high, and you'd be looking probably for the weekly order block lows or possibly deeper, right? So probably take off profit over 2 trades there. If we're going to play this as head and shoulders failure pattern, we'd expect it to come down, wick below these lows, which is previous key daily high, and nice support resistance flip here, right? And then you get an SFP on one of these levels, reclaim that level, and then we'll be entering on a long once the neckline, which is a key level, right, gets retaken, and then we would expect price to continue to the upside, right? So that's what we'll be watching there for head and shoulders failure. It might just be too strong, and it might just take off tonight. It's possible that Donald Trump gets let out of hospital tomorrow, which I think would be very bullish for the market. So it's going to be a really interesting night tonight with the New York Open. So probably be one to watch. But I think if this head and shoulders setup here does get rejected, I think the market's probably going to push pretty hard, and we'll take out our original target one from the falling wedge. The falling wedge for our divergence, bullish divergence here, right? And then we'll probably push on to target 2. So for that continuation, might be looking at something like this. And you could also trade support and resistance flip, because remember on the S&P 500, support and resistance flips play out really well, not like they do in crypto. They're much more reliable. So I think this will be a really nice key level to get a trade in as well. So flip, what I've got marked here is target 1, which is just a previous swing high, right? We can definitely get into a long position off that trade there, I think, because if you get above that and then we start trading below that, I think it's probably going to, retrace from there, right? So that would be invalidating the setup that we're going to support resistance flip here. So it's a nice entry to head up to target 2. I've gone for a little bit lower because I don't want to just try and push exactly for the all-time high, which would be the actual falling wedge target. Usually would be up here, but I think maybe at the bottom of this swing low, possibly this level here, is probably a better target just to make sure that the profit does get taken off the table, because it's a pretty good trade. So yeah, that's pretty much it from me, guys. The other market I'm looking at the moment is Uni. It's been a pretty good one to trade lately. There's possible chance that this is, trading as a bit of a falling wedge at the moment type thing. It's not that great, to be honest, but it might end up playing out, and we've got a 4-hour bullish divergence. But I think definitely this is going to need Bitcoin to get some upside, and if it does, possibly up to 6.1, or at least come up to test these highs at 5.2. So that's not a bad trade. The setup would look something like this, right? Entry here, stop loss below there, take profit 1, take profit 2. So it's a pretty big move there. 45%, so decent amount of profit in there. That's pretty much it for me, guys. I'm not overly bearish, but I do think there's definitely a swing low coming. Look at metals, that just looks like it wants to roll over and put in that bullish divergence. Bitcoin as well, just looking at this daily, probably high chance of coming down to close out that CME gap and roll over to come back and test this 9.6, but it might not happen, so you don't want to be overly bearish just too early, right? Might come down and bounce off 9.6, reclaim the monthly level and take off from there. So have to be prepared for anything that plays out at the moment, and just keep playing the levels level by level, and don't have too strong of a bias getting caught out and getting wrecked. If there's a setup there, I'm going to be taking it. Not going to be concentrating on, I'm not going to take this long or short entry because I expect the market to do X or Y. So that's my advice, guys. Not financial advice, but educational advice on trades that I'm looking to take. Thanks a lot for tuning in, guys. If you want to, and you got something out of this educational video, please share it with your friends. Give us a like and comment, because that helps us hack into the rest of the YouTube algorithm to get our content out there to more people. All right, guys, thanks a lot for tuning in, and we'll see you all in the next episode.